What's up, everybody? Jeremy Ritz here. Courage pays better than fear trading. Back at you with episode number 48 of the Traders Podcast. And I am not in my usual location to record the show because it is absolutely beautiful outside. The sun is shining. It is springtime. And what better place to record a brand new podcast episode than right out here? So that's what we're doing here. You can hear the nature sounds, the birds chirping. It's probably about 60 degrees out here in PA, and what a great day. And I'm excited that all of you are joining me here for this brand new episode. Our last episode featured the one and only Jeremy Newsom. And today you're just getting one Jeremy. And what we're going to talk about is the current state of the markets, because since we last spoke, and actually if you participated in the Ask a Trader at the end of February, we've been selling down, and for the longest time I've been talking about how the market needs a reset, how it needs a correction. That's a drop of 10% or more, even down to 20%, and that eventually was going to come. And right now, where we stand today, we're headed down to that 10%. And so I've done shows before on how to call a market top or a market bottom. We've talked about bull and bear markets. But I want to discuss that through the lens of what is occurring today. So we're going to talk about corrections. We're going to talk about bear markets. We're going to look at what's happening right now on the SPX. We're going to go back and look at the correction from 2023, from all-time highs to its lows in the mid 11%. And then we're also going to look at the 2022 bear market, just to give you an idea of what this looks like, how it's going to play out, what are the factors impacting this. And so you're going to get all that and more in today's episode of the Traders Podcast. Let's go. So what a difference that a month can make. And it wasn't that long ago, back in February, where the stock market, the broader markets, the SPX hit all-time highs. And since that happened, what we've seen is a significant amount of selling. And we're currently, as the time that I'm recording this, we're inching closer to about a 9% drop from all-time highs on the SPX. And an official definition of a correction is whenever you drop at least 10% from the all-time highs. And you can go down to 20%. Now, it's whenever you break that 20% and get lower that you enter what is known as a bear market. And a bear market is something that is generally longer than a correction. A correction could be anywhere from 1 to 3 months, while your typical bear market is going to last anywhere from 9 months to over a year. And so right now, with what is playing out, are we in a correction? Are we headed into a bear market? That's the thing about the stock market, is you don't know. And so we're going to take a look at the charts. We're going to look at the technical levels, and we're going to try to understand where we are, what's causing this, what's happening, how much lower we could go in theory, when a potential bounce could come in. And really, we're going to get all that information from the charts. But really, what we're seeing right now, why we're seeing the selling pressure, is the market has been on a bull run since the October 2022 lows in the last bear market. And that run was really driven by big tech. You'll often hear your Magnificent Seven stocks. These are your Microsofts, your Apple, your Meta, Google. All those stocks push the market higher. And then on top of that, you had the beginning of the AI craze, artificial intelligence. If you remember, in May of 2023, NVIDIA's earnings call, that was really the catalyst that started pushing us into new heights, new all-time highs. We broke 4,800 in this bull market, and then we got up into the 6,000s. And so I always use the rubber band analogy, that you can continue to stretch and stretch and stretch and stretch that rubber band, but at some point it's going to have to come back, because if you pull it, it's going to break. And what we're seeing now is that after that big, massive move, which we'll look at here on the charts, you're going to have your smart investors, your smart traders, who begin taking profits off the table. And this is why I always preach that when you are positive in a trade, to lock in your gains, because you never know when a sell-off is going to continue. And if you hold and you get stuck in a strong correction or a bear market, your positions can lose a significant amount of value. So let's take a look at the SPX, see where we are, understand what a correction is, where that level would be for 10%, where a bear market would begin, and just kind of historically go back and take a look at things and how they played out in the past. All right, so here we go. Here is a chart of the SPX. This is the S&P 500 index. And you could see that today, as I'm recording this, this is Monday, March 10th, that we are having another large sell down day. The S&P 500 is down 146 points. And just to look at this in context, on February 19th of this year, we hit new all-time highs around 6,148.30. And then since then, after all-time highs, we have dropped. And you could see that so far, we have corrected about 8.58%. Now, in order to hit the true definition of a correction, we will need to come down to this area right here, this 55.30.68, and that might be off just slightly. This isn't perfectly, it's right around there. So 55.30 is where we will get that 10%. Now, that's just pure definition of a correction. It can come lower when it corrects. And as you can see here, I have 12% marked out as well. And so it could come down to that 12% area. And keep this in mind, it could even come down 20%, and that still be considered a correction and not a bear market. And 20% would bring us down to 48.93.42. So you could see we're very close to 10%. We'll see if buyers come in there or if they'll wait till 12%. But to get down to 20%, you have quite some room to go. Now, breaking below 20%, that's where you enter bear territory, where you have not just people locking in profits at all-time highs, but then you also have typically something that negative that's happening in the larger economy, whether that's a recession, you have people losing jobs, you have high inflation, high interest rates, or some combination of all those things. That's where you get accelerated selling, because there's a contagion factor. And I talked about this a few episodes ago, characteristics of market tops and market bottoms. But when that contagion factor kicks in, everybody panic sells and gets out of the market because they're afraid that they're going to lose all their cash. And so what we need to see, what we have to pay attention to is this just a general 10% correction, 12% correction, or even a 20% correction before we bounce higher? Or will this be a bear market where we break below 20%? Now, interestingly enough, let's go take a look at Bitcoin here. And we can see that Bitcoin hit that all-time high up in the 100K plus, and it hit 109,000. And you could see that we are well below that 20% mark. We, as of today, we're down about 28.39%. So this is in bear territory. But notice it is coming up on a support here. This is the 50 SMA on the weekly, which stands for 50-day simple moving average. This is just an average price over 50 days on a weekly chart. So we'll see if some buyers will step in at this area and push it up. So there wasn't just a correction on Bitcoin. The 10% correction on Bitcoin actually happened right about here, but there was no bounce out of there. It can continue to come down to 20%, and then it went even lower. But again, keep in mind that dips, corrections, bear markets do not last forever. Now let's take a look at one more index. We're going to look at the QQQ, and this is the technology index. This follows big tech, and it heavily weights your Apples, your Metas, Microsoft, all those companies. And you can see that this thing has sold off rather extremely since its all-time highs the same day, February 19th. And what we could see here is that this is below 10%. We're actually at 12.59%. So this one actually is in correction territory. It is not in bear territory, but we haven't seen that yet occur on the SPX. Now, when did the last correction occur on the SPX? Well, you have to go all the way back to 2023. And we had a correction that started in August, or actually July 28th, 2023, and it lasted all the way until October 27th. And that correction, you could see we were on this massive run higher from the 2022 lows. And this correction lasted, let's see here, 92 days, and that was a 10.76% correction. Okay. And so when this was occurring, I remember this correction. Everybody was panicking. Oh my gosh, we're going to zero. We're heading back into bear territory again. And then what happened? Buyers came in, and then look what followed. Right? You had this massive move higher where we peaked out where we are today. So all of 2024, there was not one 10% correction. Now, there was the August of 2024 flash crash. That's right here. And if we measure that, we could see that that was close. That was 9.78%, but it wasn't that full 10%. And then you could see what happened out of there. It bounced. And when was the last bear market, you might be asking? Well, if we go back to 2022, you could see that we had this massive, well, actually, let's go back to 2020 to tell the story. So this is 2020. The market was running, pushing, and it made new all-time highs. And then you had a significant drop in 2020. And you guys all remember this. This was COVID, and that was a 35.58% drop. Now, this may have been one of the shortest bear markets in history. I don't have those stats in front of me, but this one lasted 32 days. Okay. Now, what happened after that drop? You could see, right? It ran about, what is that? 119.16%, right? So where everybody was panicking, was afraid, there were people who bought at that bottom and rode up the bull run and made a lot of money, right? But then what happened from there? So during COVID, there was a lot of stimulus that was pumped into the economy. And what happened when this bear market started was that inflation grew to be out of control. And the Federal Reserve had to respond and react by raising interest rates. And whenever that happened, that's when the party was over, and you could see the selling that started to occur. So here was the all-time high back in 2022, around 4,800. And you could see that first big dip down out of there was a 12% correction. And I'm sure people were saying, oh, this is just a correction. It's going to come back. And it did bounce, right? And then it bounced back up about 8%, but then that was followed by another drop. And then what happened? It bounced straight up, right? A relief bounce. People were probably saying, oh, it was just a correction. But then what happened from there is it dropped right back down. And so what characterizes bear markets is you'll have drops and you'll have what are known as relief rallies. And you could see that it's not just going to go straight down. It'll drop, then it'll bounce. It'll drop, then it'll bounce. It'll drop, then it will bounce. It'll drop, then it will bounce. It will drop. And then eventually what happens is the bottom will come into the market. And that typically happens when investors, traders believe that stocks have reached a valuation point to where they are cheap. In addition to the economy and the markets pricing in all of the potential possible bad news that could be priced in. And so at this point in October of 2022, when we got this bottom, the market had priced in bad inflation. It had priced in the rising interest rates. All those things were factored in. And what happened is your buyers started to step in. And it doesn't mean that it went straight up, but it started to climb out of those lows. It started to make higher highs, as we could see here. You had that correction, and then it pushed up, but it recovered. And that is one characteristic and one thing to keep in mind about bear markets is even though you're going to get those massive drops, that there will be a bottom. And history shows just from the inception of the S&P 500, no bear market lasts forever. Even if you go back to 1929, the Great Depression, and I'm going to try to make this bigger so that you could see it. 1929. I got to go way back here. 1929. All right. So now this was significant, obviously, but even in the Great Depression, so you had this massive high here, 80, and it was up to what the S&P was $32, right? And it had an 87% drop. Imagine that. That's massive. And this drop, while very significant, and this was a very, very difficult and tumultuous time for the world, you could see that over time, and not without some pain, it did eventually recover. And look what happened since then, right? So, any bear market, if you go back and study any chart, yes, it can come down and yes, it could stay down there for quite a bit, but the market is designed to do one thing, and that is to go higher. And so that brings us to the question of where are we today? What is happening today? What can we expect? Is this the start of a bear market? Is this just a run-of-the-mill correction? What is this? And here's the truth of the matter is we don't know. And as traders, we have to capitalize on short-term movements of the market. That's what we're doing. And right now, with the short-term trend being bearish, we're going short on the market. We're profiting as the market goes down. We're making those quick gains. And in terms of going long and bullish trades, we have to wait until some type of bottom sets in, uh, especially for long-term swing trades or even for long-term active investments. We want to wait to see a little bit of a bottom to where we know, hey, now is a good time to buy. Because as we can see, just going back to 2022, that just when you think a bottom is in, right? It might have a little bit of a relief bounce, but it can go lower. So you just want to be patient if you are an active investor, not using all of your capital all at once at these current lows. Buy maybe a handful of shares, very small size, and have a plan that as it continues to drop lower on those companies that you like, that are profitable, that are reputable, that are going to be around for a very, very long time, have a plan, have a strategy, and wait for them to provide even more value to where you can use more capital to put yourself in a position to own those stocks, right? But really, what is happening right now is just there's a lot of uncertainty in the markets and just surrounding a lot of the new economic policies that are in place related to tariffs, to different things happening with cutting of different things in the budget. And we just don't know how that's going to impact the market or what the outcome is going to be. And so, what we need to do is just watch and see how this is going to play out. We have to see where the support's going to come in. We have to see how the economic data comes in, and we have to see how the market responds. And that's what we have to watch for. And patience is really the key right now in paying attention to the broader markets. But the beautiful thing is, as a day trader, is there are opportunities in either direction. That's the thing about day trading. It's not just trading to the upside, it's having short opportunities to go short whenever you have these larger moves to the downside. So what I'm watching for right now, I want to see how the S&P 500 is going to react when it gets down to that 10% correction area, if there will in fact be a bounce, or if it's going to come down even further. But remember, no bear market just comes straight down. There are always bounces, and we really haven't had a relief bounce. And so the one thing to watch this week is on Wednesday, right here, we're going to get the updated inflation rate, CPI. And if that comes in cooler, which they are projecting, we could see a little bit of a relief rally from the market. Then we also get PPI on Thursday, which is the producer price index. Same thing, that's supposed to come in cooler. So that can provide a little bit of temporary relief for the markets. And that will really be a test to see, okay, was this just a correction? And now we're going to continue to grind higher and push up in this bull cycle. Or was that just a little retest, a relief rally? And what we're going to get from here is a bounce back up into those moving averages, get rejected, and down lower we go. We don't know. And that's what makes the stock market so exciting is it's always keeping you guessing. But what we can do is look at the charts, look at the trend. The current trend right now, the intermediate trend is bearish, and we have to utilize those levels to interpret what the market is doing. And so the jury is still out whether this is correction, whether we are going to head into bear territory. And it's like a soap opera as the world turns. So we will be watching very closely. I know I will, to see how this transpires. So hopefully you got something out of this, some information in terms of what's currently happening with the markets, where we potentially could be headed, and how this relates to what's happening in the larger economy and in the markets. So that's it, ladies and gentlemen. Thank you so much for joining me here today for episode number 48, out in the sunshine. I hope you could feel the sun through the TV. I hope you have a wonderful day today. Make it a great day. Get out there, do something positive for yourself, for someone in your life. Make a positive impact, make a positive change, and let me know your thoughts. What do you think is going to happen in the markets? Are we headed for just a correction? Is this just a correction and then we're going to bounce and start pushing back up to new all-time highs? Or are we headed into bear territory? I'd love to hear your thoughts down there in the comments. Please let me know. Again, thank you so much for being a supporter of Courage Pays Better Than Fear Trading and the Traders Podcast. Please like and subscribe, share with your family and friends, and I will see you back here for another episode of the Traders Podcast. I'm Jeremy Ritz. Make it a great day. Take care, everyone.